Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, June the 23rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Quite a bit of economic data today in the form of Flash PMI, which is Purchasing Managers Index. That is an index that is an indication as to what the producers of goods are thinking. So it's a pretty good forward-looking index because these managers are either ramping up production or pulling back due to the economic conditions that they see and the demand for some of their products. And the French PMI, Flash PMI, came in at 47.9, was expected to be 48.8, so lower than expected. And keep in mind, 50 is the threshold on expansion. Above 50 is expansion. Below 50 is retraction. So that retracted a little bit more than what was expected. The services PMI for the French came in at 49.9, so just slightly below that 50, so showing contraction, but it was also a lot lower than expected. It was expected at 51.5. We had the German Flash PMI for the manufacturing side was at 54.4, higher than the 52.1 that was expected, and the services PMI came in slightly lower than expected, but above that 50 threshold of 53.5, 53.2, but was expected 55. Then the overall Eurozone manufacturing PMI came in higher than expected at 52.4, was expected 51.4, and the services PMI came in at 52.4, which was lower than the expected 53.2. We here in the United States had unemployment claims. It's just kind of a precursor. It's not the big unemployment claim number that comes out on the first Friday of the month, but this came in at 259,000, which was expected 271,000. So lower unemployment claims, meaning less people are looking for unemployment than what was expected. Then we also had our United States Flash Manufacturing PMI came in at 51.4, higher than the expected 50.5, so showing expansion on the manufacturing side or expected manufacturing side. And we had the new home sales come in lower than expected at 551,000 units versus the expected 561,000 units. And natural gas storages came in at 62 billion cubic feet build versus the expected 59 billion cubic feet build. So a bigger build there on that aspect than what was expected. The overall markets in the crude oil, which isn't really natural gas, but on to the markets, I guess I should say, /CL, which is the crude oil futures, and it came up and touched the 50 mark. That is that line in the sand, that $50 a barrel mark, as you can see up here. If I don't do that, you can see up there on the high is 50 on the nose, which is right there at that value area high. So it came up there, was rejected off of that, and has come off since then. The overall equity markets are ripping higher for the most part, as you can see here in /NQ. The NASDAQ up 47 points on the day, off the highs, but for all intents and purposes, it is well above it's above the highs of the last couple of weeks for the most part, since the 14th. So I guess I should say a little over a week. But the market is ripping higher. The Brexit is hanging over our head, which is is Britain going to exit the European Union? A lot of the or a lot of the business people, I should say, don't really want to exit because, the whole currency exchange and everything else makes it much more difficult for them. A lot of the public at large is calling for the exit. We'll have to see how that is. I've heard a lot of things back and forth, but it doesn't look like they're probably going to exit. Onto the E-mini S&Ps, as you can see, up 21 points on the day /ES, and again above the last week and a half, I should say, pushing up, but it could go up and test this value area high. It's looking like it's going to all depend on what happens with Brexit and some of the news that comes out. Now, keep in mind the news really doesn't happen. They're saying it happens today, but it's not really going to happen until after the market closes and pretty much when everybody is sleeping. Here you can see the E-mini S&Ps /ES on the daily chart, 15-minute bar breakdown. You can see right here overnight really screamed higher, then came back to the lows right before the market opened, and then pretty much just started rallying with not a whole lot of pullback. But we are at this value area high. I've talked about this in a couple of different videos at Pro Trader Strategies on how to trade these market profiles on the daily chart on an intraday type basis. And if we kind of zoom in here, we'll look at it. Well, we come up and bounced off of it a couple of times. We haven't really settled above or outside of that area. If we can push up, maybe settle outside of there, then it would be looking like a good time to short it. If we settle outside, come back down, settle back inside, I should say, that would be a nice time to look to get short in that E-mini S&P. You also really like to see this taper that we saw here on this spike. The taper action really overnight would have been a good time to sell that when you start seeing it really get thin or really long on just a quick move there. On to a couple of things that I've done. I tweeted this out yesterday, and BBBY, Bed Bath & Beyond, BBBY, sorry, is the ticker symbol. And I decided to go in and short this just because the overall retail sector has been doing so poorly. And so I went into the June, so it just had till tomorrow to expire, and I wanted to get that theta decay really quickly, and this volatility crush that you can see happening today. That usually happens right after these earnings plays. So in Bed Bath & Beyond, I did the June, sold the 46 calls for 32 cents. That was covered immediately on the open. As soon as the market opened, it was right down at the value area low, and I decided to cover that. Got out for 2 cents, just 2 pennies there. The market then just screamed higher afterwards. So that's one of the reasons why I like to cover those trades, especially when they're nice winners right off the bat in the morning. On to Tesla. I told you guys I had a short leash on this, and the market came and opened up below yesterday's low, and I immediately looked to get out. I probably got out a lot worse prices. As a matter of fact, at one point in time, I think Tesla was positive on the day, and I could have waited a little bit for that, but the idea was pull the ripcord as soon as it didn't confirm that the market was going to turn around on that. So I covered it a little early, and I had on the August, and I bought the 220 calls for $7.60, got out of them for $5.40, and so I lost a little bit of money there, but that's the idea. I kept small on that, and because I wasn't really confident in a turnaround, just thought with the love of Tesla, everybody would jump on board with that. But it looks like a lot of the investors in Tesla are really worried about Elon Musk buying Elon Musk, and Tesla, taking on Solar City just seems like it might not be the best idea there. Tomorrow we're going to be doing a webinar on the poor man's covered call. So if you have a smaller account or you want to create more of a diverse portfolio, a great way to do it is with margin, leveraging yourself, and you can do that with options. So you could buy 100 shares synthetically by using options, and then we're going to be selling some calls against that position to lower our overall basis. So when you lower your overall basis, that means that you will increase your return on your capital at the end of the day. So we're going to be showing all the rules that goes into doing that particular strategy tomorrow. So you can go to protraderstrategies.com and sign up for that. The more the merrier. We've had a lot of participation in that. I go back and forth with you guys, ask you what stocks you really like, and we'll build a strategy around that particular stock to see if it fits all the parameters, all right? If you can't take that, take it easy.